Hi guys, it's Doc's Market Minute for Tuesday, January 12th. I got two things I want to share with you today that are just very simple and relate to price action. First thing is that when we've had a big sell-off like this, and we've seen a couple of them now in the last few months, and we're going to see more of them going forward, I do believe. We're still in this character where we have volatile and sideways, and we could actually end up being volatile and trending, which is to say bear market price action to the downside. So we've already crossed into a bear market on the Russell and the transports in the S&P, the NASDAQ, and the Dow are threatening to do the same thing. So if we continue doing this, what we're going to see is that any bounce back up, especially in the morning, what you don't want to see is a gap up in the morning because that will be sold into. So this market's been open for an hour now, and you can already see that the highs are being sold into pretty strongly, very persistently. Every little dip back up is being pushed back down. What you want to see is a rally at the end of the day. You would prefer actually to see a gap down in the morning, recover eventually, and then see a rally at the end of the day. Those are the ones that stick. The early rallies are the ones that get sold into. Secondly, what I want to talk about is that the 78-minute chart, now it becomes very useful. A lot of times I don't even show the 78-minute chart, or I just maybe show just a little bit of it here because we're mostly focused on the larger time frames, such as the monthly, weekly, and the daily charts. All right, so the daily charts, we know that we're seeing an exhaustion signal down here with this linearity, so it's likely to sort of at least pause here, perhaps reverse. There's a couple of ways that we can see this happen. We can see it go sideways or slightly up. That's more of a bear flag type of pattern if we start to see something like this. It can also recharge by just going straight up like this. But regardless, we won't see any kind of reversal until we see a reversal from the inside out. So this is one of my main rules, is that stocks will reverse from the inside out. So they'll start to reverse from a smaller time frame first before they propagate to the larger time frames. Let me show you what I'm talking about here. So right now we're in a 78-minute chart, lower highs, lower lows. So far this is only a lower high. This is no big deal so far. But if we see the price put in this lower high, a higher low, and then a higher high, we'll start to see a reversal at this time frame down here. And what this will do, will start to print this daily swing. Now this by itself is not a reversal yet. What we'll have to see is at that time frame, we'll have to see this lower high with a higher low and then a higher high. We'll have to start seeing this type of price action. And only then will we start to see the weekly chart start to swing up. So you can see how reversals start from the inside out. They propagate higher in time frame one by one. And right now, we have a major lower high setting up on the monthly chart. And if we print a lower low, then we've got a full change in polarity, a downtrend on the monthly chart, which is a very serious signal. So I'm not trying to project forward. I'm not trying to look at the future or anything like that. I'm just dealing with what's in front of me right now. And what is in front of me right now is we've had this very strong, very linear move lower on the daily and the weekly charts right now. And it would make sense for them to slow down and either flag out on a bear perspective or just outright bounce back up. The highest that I see that bounce coming is going to be about the 50% fib, or somewhere just south of the 2000 level on the S&P. It's going to be a hard road for this thing to reverse itself and go back up again. You can see exactly how difficult this was back here in the August-September time frame before it finally did reverse. Right? So this is the type of thing that you see, is that a lower high sets up in a retest, and then and only then can you start to recover from there. Very unlikely to see V-bottoms anymore. V-bottom was the kind of the world of 2013, 2014 when all the QE was being thrown in and every dip was being bought. We have a very different world right now with a tightening environment, so very unlikely to see V-bottoms. That's it for today's Market Minute. Hope that helps. See you tomorrow.